President Biden pressed for order across American college campuses where protesters are rallying against the war in Gaza. Tensions have been escalating between demonstrators and police, leading to violent clashes and arrests. Many of the recent campus protests are occurring at universities with multi-billion-dollar endowments, I should say. And among students' demands is a call for their institutions to divest or end endowment investments in companies with ties to Israel. Their hope is that divesting creates economic pressure that leads to changes in Israel's treatment of Palestinians. So we asked CBS News reporter Erica Brown to speak to experts about those demands and their potential effects and whether any of this is even really possible. So, Erica, first let's start with the demands. What are they?
Yeah, and I spent the day, John, digging into this to figure out what are students asking for here, what does this entail, and what are the implications. So as you mentioned, students want their universities to divest from Israel. This means they want them to end their investments with companies that have ties to Israel. This, of course, in response to the ongoing Israel-Hamas war. Now, specific demands for divestment, that varies from school to school. But essentially, we're looking at three things generally that students are asking for. They want their universities to divest from Israeli businesses themselves, businesses doing business with Israel, and also defense-related manufacturers and weapons manufacturers. And so when we look at these three things, we start to see this mobilization across the United States. And so we see this connection also with the pro-Palestinian BDS movement, which stands for Boycott, Divest, and Sanctions Against Israel. And they have their own list of targeted companies. But we also see parallels drawn between protesters today and protesters in the 1980s. College students advocating for their universities to divest from South Africa during apartheid. Now, even though those were successful in many cases, experts warn that the global landscape, the economic landscape was very different, and the way that universities invested was different then too. Instead of focusing on stocks as they were then, now universities are focused with endowment managers, asset managers on index funds tied to Wall Street, private equity funds. When you're dealing with private equity funds, things get less transparent. And so the global landscape is a lot different than it was in the 80s.
Right. So you're not just pulling it from a single stock. It's mixed in with a whole bunch of other stocks. Let's imagine, when you talk to those experts, let's imagine a school could pull itself out of this. What would the effect be on Israel of that?
Yeah, so the economic impact, according to experts, is not likely to have the sort of effect that student protesters may think it will have. So if they divest, that essentially means that they're going to sell their investment. They say in this market, if you're selling an investment, especially if it's with a lucrative company, someone's going to buy that immediately. So instead of seeing a sort of gap or a lapse in business, you'll just see it shift hands from one institution or one investor to another. And so it won't have that sort of economic punch to the companies themselves or to Israel's economy itself.
And now what would it do, again, assuming this can happen, because as you made that very good point at the beginning, the financial instruments themselves are not so easy. You can't just kind of cross out one name. What would it do to the bottom line for the schools?
So I spoke to one expert who said endowments, that's what you need to focus on when you look at divestments. And an endowment is essentially, in their words, it's like the university's version of a 401k. It's a way that they can secure the financial future of the university with no intention of ever retiring. It's just going to grow and grow and grow. And so when you look at the way that they invest, they're looking to build returns. They're investing in ways strategically that's going to give them high returns that can help supplement their operating budget. And so when they're investing in lucrative companies, that return helps them fund some of the operating budgets that includes faculty salaries. It can include financial aid services. It can include classrooms, infrastructure for the school. And so divesting in a way could have a sort of ripple effect on the excess that they need to help supplement the school's operating budget.
Erica Brown, thank you for chasing all of that down. We really appreciate it.